Hello, and welcome back to my YouTube channel. James here, as ever, for today's ACCA Taxation. That's the F6 paper, where I'm going to walk and talk you through the external examiner's report, specifically going through Section A that will be on your computer-based examination. Now, if you'd like access to this document that you can see on the screen, just click the link in the description of this video. It's going to take you directly there, and you can take down some notes that could be the difference in getting you that pass and the 50% to take you through your ACCA journey from my experience as a qualified member. As ever, we always dedicate videos on the channel to my lovely subscribers. So, F2 Gamer, you can see, who has left a lovely comment. Sadly got in the 40s, needs some help how to pass this exam. These videos are dedicated to you. We've also got videos on the channel for Section B and Section C, so make sure you check those out. They'll be linked at the end of this video, so make sure you stay to the end, take some notes, leave me a comment below if you've got any taxation or ACCA questions, and of course, so that you don't miss out on any future videos, be sure to subscribe and give this video a massive like so that we can encourage more students to pass the examinations and that they get to see more of the videos. Thank you so much for all the support as ever, but let's get cracking on into the video now. Pen and paper at the ready, because basically this document is written by the external examiners. Hardly any ACCA students go into a lot of depth with it, but that's where you'll see as we go through now, you're going to have my notes that you can take down, anything that was really key, and this document, as you can see here, highlights the strengths and weaknesses of candidates' performances, and it's to help and advise future candidates to pass the taxation examination paper, just like yourself watching today. Well, Section A, first notes for you to get down, and everything, if you've not watched one of these type of videos before, underlined, are key things that I picked up from my experience, that basically Section A covers a broad range, if not the whole syllabus, and the external examiner here is telling you that future candidates should aim to revise all areas of the syllabus rather than trying to question spot for the first part of your examination. This is giving future candidates an indication of the actual types of questions asked. So within this video, we're going to go through some examples of some previous Section A questions, how to deal with those sort of style of questions, and a technical debrief where again, you're going to have my notes on there that is saying, what did James think when he first read this through? So this is our first Section A example that you can see on the screen, and again we've got the correct answers indicated below, but it's just to highlight for you that if you're sat in the exam and you're going through a question that comes up like this, what should you be picking up on? Everything underlined are the key buzzwords, along with, you can see there in the requirement where it says which 3 of the following penalties, so we've got to select 3 of them, could Hassan be charged in respect of the late filing of his self-assessment tax return. Now, this actual external examiner's report is for the 2021-2022 tax year, but nevertheless, if you're doing another tax year, these are still going to be relevant because it goes through the exam technique, and then you can apply just the different allowances and rates. So be sure to stay to the end and take down some notes. But for this one, we had Hassan filed his self-assessment tax return for the 19-20 tax year on the 31st of August 2021. The return showed a tax liability of £6,200, which Hassan paid in full on the 31st of August 2021 on there. So, as you can see here, he's filed his self-assessment tax return on the 31st of August 2021, which is 7 months after the deadline. So, as you can see on the screen here, I've got a little timeline there to say, well, what was the date when it should have been submitted, which for the 19-20 tax year was the 31st of January 2021 in the UK tax system. Therefore, he's submitted 7 months after the actual deadline. So this is where we're going to have some other areas of interest that are going to be associated with this. So we got given 6 examples on here, but let me just scroll it down as to which ones were the correct answers. Well, the first one being a fixed penalty of £100 on here. Let's get it all on one screen actually. £100 fixed penalty for first of all missing the 31st of January deadline. So that's first of all on there. Then we had £900 of daily penalties, which was 90 days at £10 per day because of the failure to file exceeding 3 months. So we've got a 7-month period. If it was over 3 months, That's where you get 90 days in 3 months, £10 a day, all from missing the 31st of January payment deadline. Then we've also got plus £310 of tax geared penalty. Now I know what you're thinking, going, oh my word, James, what was that in this? Well, this is where we have the £6,200 for the tax liability outstanding, and this is where the rules and rates may change depending on which tax exam you're doing, but it's at 5% because of the failure continued after 6 months and is greater than £300. So it's just one of those rules which, again, you needed to answer all 3 correctly to get this to get the full mark here. But they also, which is really good in these external examiners reports, tell you the incorrect choices, and I've written some notes at the bottom as to saying why it can't possibly be right. Well, the £200 on there for the fixed penalty would be being 2 lots of £100 of late filing. Well, we only know it's £100 when you submit late for your tax return, or when you file late, for example. For the tax geared penalty, we actually had the incorrect percentage applied, so they put down 10% rather than 5%. This is all down to the rules and the rates for that particular tax year, so just be careful to note it down. What is that charge for the tax year that you're actually sitting? And then the final one, we actually had 90 days versus 3 months, 3 months maximum, with the rule incorrectly applied. So being £10 per day for 212 days from the 1st of February 2021 to the 31st of August 2021 on there. So in other words, they calculated the number of days when it should have been filed from up to the date when they submitted, which in that case was 212 days, and multiplied it by 10. Whereas what we know on here is that it was only for a maximum of 90 days on there at £10, and hence we had the £900 of daily penalties. So that nicely took us through the first example on here. We then have a second example, and this was a VAT liability under the flat rate scheme. And what is Jack's monthly VAT liability under that scheme, basically? With the correct answer being $960, so no need to include purchases within your consideration. But just to break it down that you can see on the screen, Jack was registered for VAT on the flat rate scheme, had sales of £10,000 per month, and his standard rate purchases were £7,000 per month. Both of these amounts were exclusive of VAT. The relevant flat rate of Jack's business is 8% on there. So all we need to do is applying the actual flat rate percentage to the taxable inclusive turnover, and in that case what we need to do is take the £10,000 plus 20%, which was for this particular tax year on here, so that's the 2021 tax year, where the VAT rate was 20%, so just double check which was the VAT percentage for your particular tax year, at 8%, giving a VAT of £960 outstanding on there. And that's the 8% came from the relevant flat rate percentage set of 8%. We didn't have to take into account any of the purchases. So again, that would have been a very nice question if it had come up in your examination. Next, we have residency of companies, by the looks of it on here, and the requirement was asking us for what is the relevant profit threshold for determining when Zen Limited will have to pay its corporation tax by quarterly instalments for the year ended 31st of March 2022. So again, we've got a different tax year that needs to be applied here, but quarterly instalments, again for your notes, please get it down. It's a classically examined area on the taxation paper. And Zen Limited has the following holdings of ordinary shares in other companies, and this is where a good exam technique for you would be that if you're in a centre, you can actually have a scrap of paper rather than if you do the examination at home. But if you do have access to a piece of paper, writing down the actual group structure, that is one of the key things to getting down why this is a correct or incorrect answer. So I'm just going to take you through some of the key figures, then we'll come on to the answer at the bottom. As you can see, I've underlined the percentages, and then also if the company is resident in the UK or overseas, just in case we had a different area that was asked in the requirement. But in other words, it also acquired a shareholding in Bell Limited on the 1st of March 2022. So for that scrap piece of paper again, I've written down what was the first day of the year, so it was the 1st of April 2021. What was the last day of the year? 31st of March 2022. And that meant that the acquiring shareholding of Bell Limited was within this company year end on here. Zen Limited paid its corporation tax liability for the 31st of March 2021 by quarterly instalments, and its profits for the year ended 31st of March 2022 are 1.2 million on there. So let's head down here to some of the other technical aspects to see if you got that one right. And this is where it questions about explaining how a large company will need to have a quarterly basis and to computate the instalment payments. But coming on to the technical areas there and key notes for you to get down, it doesn't matter on the location in terms of quarterly payments for calculation purposes, UK resident or overseas. The key thing for you to get down is that the 51% group companies are Zen Limited and Abe Incorporated on there. So 1.5 million divided by 2 gives us a threshold of 750,000. And that is where the correct answer was 750,000, where it came from. But the key thing on here is Bell Limited was not acquired until the 1st of March 2022. There are only two 51% group holding companies at the end of the immediately preceding accounting period. The year ended 31st of March 2021, i.e. the year before. But this would mean that no, Bell Limited does not count for the 2022 year, but it would be included for the calculations in the 31st of March 2023 on there. The threshold is 1.5 million and therefore divided by 2 to give us 750,000 on there. As to coming up to what the question was asking, what is the relevant profit threshold for determining whether Zen Limited will have to pay its corporation tax by quarterly instalments? Well, we had a profit of 1.2 million. We also had the correct answer being 750,000 on there, but this is where we now have where the incorrect options were, that 1.5 million being the total threshold, so not adjusting for the 51% group companies. We also had the 1.5 million divided by 4 companies and divided by 3, and therefore wrongly classifying those companies as a result on there. But it's just coming up to the only final thing to note on here was the threshold for you to note being 1.5 million for the 2021-2022 tax year, and just check what it would be for your particular taxation examination. Example 4, we had what is Brian's capital gains tax liability for the 2021-2022 tax year? And again, classic area where you've got to differentiate between income and chargeable gains, two different forms of taxable income on there. But we're asked actually what the capital gains tax liability will be. We've got employment income, so determining are they a basic rate or a higher rate taxpayer, and a chargeable gain on the sale of an antique vase of £18,000. But let me show you all my notes on here, how to help you out. Well, the correct answer, first of all, for anyone who's calculating them or had a go beforehand, was £570. And this is because Brian has £7,270 of basic rate tax band left. Therefore, start with the personal tax workings straight away. So this is where you've got to be careful of the employment income for this particular year and less the basic rate bands. So for 2021, 2022, it was £12,570 for the personal allowance. So then that means that we're only leaving ourselves £7,270 left. So just showing all your workings. I know we've got to come to the right answer on there. But next we go on to the capital gains tax working. So Brian's chargeable gain was £18,000, as we can see up at the top there. On there, I'll put my mouse by it for you. His annual exemption amount, and again, for this particular tax year, it was £12,300. It will probably change for the actual tax year that you're doing it. So just be careful on adjusting for that. The taxable capital gain of £5,700, as all of this falls within the remaining basic rate band of £7,270, then the £5,700 is taxed at 10%, the lower rate of capital gains tax resulting in £570 on there. So that's because they're a basic rate taxpayer, they only pay tax at 10%, not the higher rate. The other incorrect calculations were as follows. So you've got a full chargeable gain of £18,000 that they worked out on there, taxed at 10%. But basically I would have down for your notes, try to picture what's going on in the scenario to actually better understand it. And then this still would have gained a method mark in section C for all your workings. So just be aware that section A and B within your tax exam are marked by a computer, and section C is marked by an actual individual marker. So showing all your workings as you go through is going to be really key to picking up on all those method and carried forward marks in the taxation examination for you on there. But as you can see, that nicely takes us through the examples for the section A of the Taxation External Examiner's Report. I hope that was helpful going through, and those little techniques, along with the notes we've gone through today, could be the difference in helping you to pass your examination. So be sure to subscribe to the channel so you don't miss out on any future videos, and of course give this video a massive like, as it could be the difference in getting you that 50 plus, and it means that more ACCA students can see these videos, which, as we all know, can be the difference of just getting that 50 plus, progressing in your ACCA journey, and to becoming qualified on there. But as always, on that bombshell, we'll see you next time. Cheers.